Well, welcome everybody. Thanks for joining us today. My name is Clay Malcolm here at Advanta IRA, and I'm delighted to be joined by Michael Eisman of Acre Trader. Michael, how are you today?
Doing well. Thank you for having me.
Good, good. We're delighted to have you. I've got a chance to preview the slides, and I'm really looking forward to this. I know that I'm going to learn some today, and it seemed like a great way to kind of understand how farmland can be put into your IRA portfolio or even your personal investment portfolio. So again, thanks a lot for joining us. So from a housekeeping standpoint, if you have questions along the way, go ahead and type them into the questions box. We may also be utilizing the chat box for kind of more immediate feedback, but the questions on anything that you see in the presentation, go ahead and type them into the questions box, and we'll answer those at the end of the presentation. I'm going to go ahead and start a little bit with kind of self-directed IRA information and how that process of an IRA invests in farmland goes, so that you have a sense of how that would work. And then Michael's going to take over the bulk of the presentation and talk about just that entire asset class and the environment that we're looking at in terms of investment and things like that. So the session will be recorded today, so if you miss any part of it, you'll get a link to the recording, so you don't have to worry about not being able to go back and listen to it again. And yeah, so I think with that, we'll go ahead and give it a go. So again, thanks a lot for joining us today and spending some time. So this is me, obviously. I've been in the self-directed IRA space for about 10 years, both as a professional, but also as an investor. So I am a self-directed IRA investor myself. So I love doing these webinars because, again, I do get to learn about asset classes and investment opportunities. But it also means that I really understand intimately the process and the things that we go through as self-directed IRA investors to get our IRA or tax advantage money working. And I'm always happy to talk to you about your investment goals. You know, obviously we don't give any tax, legal, or investment advice, which I'll get to in a moment in the disclaimer. But talking about how the account works and what kinds of investments are available, and the account types that you have and strategies that go into that, I'm happy to discuss with you. So please do feel free to reach out either via phone or email, and happy to chat with you about that at any point. As I mentioned before, all the information here today is for education purposes only. At Advanta IRA, we don't give tax, legal, or investment advice. We don't advocate any particular asset class or asset vendor or investment strategy. And we certainly encourage you to talk to your financial team anytime that you are thinking about an investment to get help with vetting or just the way that that investment is going to work in your overall financial picture. One of the things that this disclaimer kind of points at is the fact that at Advanta, we are really a neutral part of the equation. We are the provider of the account, and we keep the bookkeeping and do the administration so that that account can keep its tax advantages according to the account type while investing in alternatives. But we do not give any advice in terms of what to buy or when to sell or pricing or any of those types of things. We really are here to execute your investment strategy. So you bring the investment that you want to do, and we help your IRA to accomplish that. And we are a customer service organization, the way that we're built. We have long tenured employees. We invest a lot in our employees' education. We're kind of a medium-sized company in the space, so we're big enough to have seen everything that goes on with the self-directed IRA world. But we're also small enough that you have somebody's direct extension, you have their email, and you get a two-person team here at Advanta. One is usually an education person like myself, and then also a kind of a back office account manager that helps with the nuts and bolts. So you have a two-man team. You always know who to turn to for information, and we try to make your self-directed IRA experience as seamless as it can be. And of course, when we're talking about self-directed IRA investment, we're talking about, I think, you know, a lot of people think that self-directed IRAs are an account type or a legal distinction, and they're not. The account types are actually the ones that you're already familiar with. So a traditional IRA, Roth IRA, health savings account can invest in these alternative assets as well. Lots of times somebody's rolling over a 401k from an employer where they are no longer employed. So those are automatically mobile, so you can roll those over without tax and without penalty, and typically to an IRA that will then go out and invest in these kind of alternative strategies. We also handle solo 401ks, SEP and simple IRAs, as well as education savings accounts. So the account types stay the same. Contribution rules stay the same, distribution rules stay the same, and of course the tax advantages stay the same. The thing that is different about having your IRA at Advanta, of course, is that the assets that are available for that account to invest in are different. Whereas at a bank or brokerage house, they may say, yes, we'll be custodian for your IRA, but you can only buy publicly traded securities while we are the custodian for your IRA. We took the opposite approach and said, hey, we'll be the custodian for these accounts, and they can invest in almost anything that's allowed by law. But we do specialize in alternatives. We don't do publicly traded securities very well. And when I say alternatives, really what I'm talking about, and this is just a small snapshot of the many, many assets that are available. There's real estate, that can be commercial, residential, or any of the financial instruments that are associated with that. So tax liens, trust deeds, et cetera, et cetera. We handle private lending. Your IRA can be a lender, or it can buy notes, fractional or whole, or you can be an originator. All those lending types of options are available. Today we're going to be talking about specifically private equity as it relates to agriculture. So sometimes there's overlap in these things that I've listed on the screen here, but do understand that your IRA can invest in all these things. So precious metals, cryptocurrency is one that's had a lot of interest lately. But lending and private equity and real estate-based assets, they're really by far and away the most popular. And so any type of strategy that you have, or any expertise that you have, if you know how to make money outside of your IRA, lots of times you can make money at it inside your IRA as long as you take the time to set it up properly. So you get to exercise your own investment strategies and exercise your own expertise. So all these potential investments are available for your IRA as long as you have a custodian like Advanta that handles these asset types. And since today we're talking about agriculture and specifically a private equity format, I'm going to just spend a little bit of time talking about private equity considerations for your IRA. So understand that it could be a private company, so that could be an operating company. It could be a fund that is then going to buy, say, a large piece of real estate or something like that. Certainly the aim of the private entity, whether it's a fund or a company of some sort, can be all kinds of things. Could be real estate based. Certainly today we're going to be talking about agricultural based real estate, but could be a cryptocurrency fund, could be startup companies. There are all kinds of venture funds or venture opportunities for your IRA to invest in the things that you want to, that you think are the best for your financial strategy. And you get to discover these things in a variety of ways. So it may be somebody that you know personally has a company or a fund that has started, or it could be from a source like Acre Trader. We're going to talk as our kind of case study today. So you may find an investment opportunity on a platform like that offers certain investments. And then there's always networking groups and things like that. One of the things that I always encourage people to talk to their investment provider about is what is the offering and where does it fall in kind of the Jobs Act, and more importantly, I guess the more directly what I'm talking about is, do they handle accredited investors only, or can they handle both accredited and non-accredited investors, or all non-accredited? So, and a lot of that has to do with the Jobs Act and the categorization, the way that the offering is structured. So understanding whether your IRA can participate or not is an important thing, of course. And accreditation status for your IRA follows your personal accreditation status. So if you're accredited as a person, your IRA would be. If you're not, then your IRA would not. So that's, at the moment, that's the way that rule has kind of distilled itself in the self-directed IRA investing world. And then anytime you're considering an investment for your IRA, you certainly want to do proper vetting. There's all kinds of sources and ways to do that. Obviously, you can get professional help to do it from your financial team. But definitely these kind of considerations are important things to think about before you actually pull the trigger for your IRA to invest. So the principles that are involved in the particular offering, what's their experience? What do former investors say about them? The risk evaluation can have to do with the investment type or the personnel that are involved. Reporting transparency, finding out how you're going to get information about the way that your money is performing and how it's being deployed is often a very important criteria for investors. Certainly thinking about the returns. So how much of those are those returns, and when do they occur, and in what format? And that has to do with the fact that your IRA is usually kind of a slice of your overall financial picture. So using that in concert with the rest of your finances is one of the nice things about the tool, but understanding how any particular investment pays its investors, whether it's a lump sum after a very long time or small increments as you go, all those things might play into whether this is an investment that works with your overall financial strategy, or whether it's not something for your financial strategy. And then also thinking about the exit. And I always talk about this because IRAs are built to be opened, to invest, and then at some point you're obviously going to take benefit of that, right? Take distributions. So thinking about your distribution strategy, especially as it relates to the investment returns of a particular investment, all those things go into something to choosing an investment that would be best for your financial world. So all these things are, and this is just a snapshot of a few ideas, but thinking about these investments that you may be contemplating certainly has to do with a lot of factors as they relate to your overall financial picture. And if your IRA is going to invest in one of these private equity investments or any of the other alternatives that we mentioned, remember, it's a relatively easy process. Typically, somebody will open an account with us. That takes a business day. Once we get the completed application, it's pretty easy. They'll put some money in that account. You can do that via contribution if you're eligible to make a contribution, transfer from another IRA, roll over from an old 401k or 403b or other type of retirement account. All those moves of funds, transfers and rollovers done properly are not taxed and they're not penalized. You're just moving the money to a provider that handles the assets that you want. And then once your account is open and the money's in there, you're ready to invest. So it would just be a matter of working with the investment issuer, assembling paperwork, and you do that alongside your Advanta account manager to substantiate what it is your IRA is investing in. And when you tell us to, we'll send money out of your IRA to complete the investment and receive the funds. And obviously they keep the tax advantages of the account type that you have. This was a relatively quick overview of the way self-directed IRAs work, but we are very invested in education. So please do feel free to use any of our resources. We do a lot of webinar events like this, as well as some periodic Zoom calls that are investor networking events. We have a video library on YouTube that's extensive. So any kind of thing that you might want to inquire about when it comes to investment types or account types and things like that, probably covered in our YouTube channel. And the blog on our website is a really nice one especially in terms of current events. So when the Secure Act came out, when the CARES Act came out, all of these things that have changed your tax world just a little bit, obviously the delay of your tax filing date this year, those types of things are always covered in our blog. So for up-to-date information, please feel free to avail yourself of that. It's on our website. So I mentioned earlier that questions are welcome. So please go ahead and type those into the question box on your console, and we'll answer them at the end of the presentation. And at this point, I'm going to go ahead and turn it over to Michael Eisman of Acre Trader, and he's going to be talking about farmland investment and the kind of the environment that investment asset class is experiencing at the moment, and give you some information about how that investment might work for you. So Michael, are you there?
I sure am, and I'll join my webcam again at the end of the presentation here. Are you able to see my screen?
I see it. You look good, and yep. So Michael, go ahead and take it away.
Great. Well, I'll start today. We'll cover investing in farmland very broadly, and then I'll share a little bit about the Acre Trader solution, or the platform that we've built here as well. But first, I'll start with a very similar disclaimer. This is educational only and not investment advice, and you will see some average historical returns here, but they're not forward-looking statements, and there are no guarantees with any investment, and all investments have risk. Just a brief background on, I lead our investor relations efforts here at Acre Trader. I've been here for a little over, or right around 2 years now. But prior to Acre Trader, I was actually at a group that it was an entrepreneurial support organization. So it was a group that helped startup companies and early stage ventures identify a product market fit, identify early capital opportunities in order to grow and kind of find those first customers. And through that experience, I had the opportunity to meet with 250, 300 different companies and entrepreneurs, and have a lot of those conversations. That's actually how I met Carter Malloy, who's the founder of Acre Trader, and the team here, and eventually joined on. The team and product market fit are so important, and it's just something that they got right from the very beginning here at Acre Trader, and I learned from the team every day, and it's the most exciting thing that I've been able to work on in my career. So it's enough about me. I'll go into farmland investing in general, and there are some very notable names that have commented on or participated in farmland investing. Warren Buffett has made a comment comparing all the farmland in America with all of the gold in the world, that he'd rather own that. And I would still, I think the quote went on to, and I would still have enough walking around money to buy ExxonMobil 3 times or something like that. Jim Rogers has commented broadly over the last decade about investing in farmland. You've likely seen some information about Bill Gates, who was recently named the largest farmland or private farmland owner in the United States. And Mark Twain's quote, "Buy land, they're not making it anymore." It's been, farmland has been a very one of the oldest asset classes that there is, but it is pretty difficult to invest in farmland. That hasn't kept these individuals or large institutions from investing in the space, but for the most part, it is owner operated. Over 60% of farmland is owned by the farmer who is operating. But why have these people been interested in farmland? And this is a chart that you'll see on our website and across a lot of our materials, and it's a great picture of what has us so excited about farmland just as an asset class. You see a lot of different well-known asset classes depicted here. On the y-axis, you'll see the average annual growth rate. So, and this is the last 50 years, according to a group called the National Council for Real Estate Investment Fiduciaries. They've been tracking a farmland index for a very long time, and it's more of the industry standard for a farmland index. But on the y-axis here, you'll see the average annual growth rate. That's returns over time. So the returns for farmland are primarily twofold. You have the annual distributions, or the annual income that would be from the operations on the farm, or in many cases, just a farmer paying rent to expand their farming operation. They may rent these acres and spread their fixed costs over more operating acres. And then on the x-axis here, you see volatilities. Volatility would just be price swings over time. Obviously, REITs or stocks are going to bounce around a lot more than CDs or AAA bonds, which you'd see on the left side here. In farmland, we'll dive into a little bit more of the kind of macro trends or why. Part of it is just lower debt utilized in the asset class, but has some intrinsic factors that has helped it achieve these high returns with limited volatility over time. And a little bit more comparison to other asset classes here. Farmland does have that yield element that I mentioned, again, from operations or from rent. The volatility has been limited compared to a lot of other asset classes. You continue to build more equity over time, and that's kind of the compounding effect of that farm appreciating during the life of the investment. There's typically no or low leverage. There's often some leverage used in farmland, but it's not very common compared to other asset classes. We almost never use it on the Acre Trader investments. It's a hard asset and an inflation hedge. It is typically done very well during times of inflation. And it's done well during times of economic uncertainty and volatility as well. If you combine those two drivers of return, both the annual income and the appreciation, the returns for farmland have been positive every year for the last 30 years. The attractive returns are just one element that you're looking for. We're big believers in diversification. No one should have a only farmland portfolio, but it does give you some exposure outside of the market or into some alternative non-correlated assets. And next we have the disappearance of productive land here. This is kind of the data considerations for Mark Twain's quote on the slide earlier. Buy land, they're not making it anymore. There's less and less land available and more mouths to feed. You hear often the American Farmland Trust is a group that is dedicated to preserving farmland, but their quote, and this is mostly due to development, but we have 3 acres of productive farmland disappearing every minute in the United States. Now that sounds like a lot, but there are over 300 million acres of cropland, 900 million if you would include the grazing or pasture land that you would maybe not be growing corn and soybeans on, but you could still raise cattle or other livestock on. So that 300 million acres of U.S. farmland is shrinking while the population is growing, and that's what this arable acres per capita in the United States trend line is meant to represent here. That you have both an increasing population and a decreasing population, or I'm sorry, a decreasing amount of farmland. And I'm not sharing the slide to scare anyone that that you can still produce a lot of food on 1 acre of land, enough to feed more than one person. This is more of I guess an appeal that farmland is not a short-term trade, but a long-term investment, and that we feel very confident in the macro trends that have led to this long-term appreciation of land values over time. Farms have also gotten larger. Now, economies of scale are at play across just about every industry, and agriculture is no different. And so I mentioned earlier that over 60% of U.S. farmland is still owner operated, but those farms are getting larger. Part of that is because there are more costs. There's a generational turnover. So that is, someone retiring and maybe their children are not interested in farming. But 30 years ago, you could have made a living on 500 acres. And today it's hard to find successful operators with less than 1,000 acres under management. And many of the farmers that we're talking to have 8,000 or 10,000 acres that they are managing. They don't necessarily own all of those, and they aren't necessarily contiguous, that is, connecting acres. But it wouldn't be uncommon for a farmer to own some of the land and then rent other farms in their area so they can spread those fixed costs over more operating acres. At Acre Trader, there's many young farmers who we're working with, and they're almost like this farmer CEO or an entrepreneurial young farmer looking to continue to expand their operation. And we're excited as essentially a growth partner to help them expand their footprint. Kind of staying on the macro trend here of what we're seeing geographically for farmland. If someone were to build a well-diversified farmland portfolio, having one farm in every 50 investments, one farm in every state wouldn't necessarily give a good representation of agriculture in the United States. If you think about Alaska, it's the largest by land mass, but there's not very many growing degree days there, and it's not an agricultural state like many of the others that you see represented here. The green states are actually farms where Acre Trader has active investments or ongoing interests. But these top 15 states produce over 2/3 of the cash receipts for U.S. That is revenues associated with agriculture, and they're kind of concentrated in different regions. We look a lot at the farm region before making any investment decision on the individual farm. And the regions that we see the most active farming communities, because they have those soil, water, and active farming communities that we look to invest in, it would be the Corn Belt or the Midwest. So that would be stretching from eastern Nebraska through Iowa, Illinois, some in Minnesota and Indiana, but the Midwest, where you see a lot of corn and soybean production. The Southeast or the Mississippi Delta area. So that is either side of the Mississippi River is very flat, and it has a lot, after hundreds of thousands of years of soil deposits from different Mississippi River floods. You have very, very fertile soil. It is a sandier soil though, fortunately, and so sandier soils will decrease, or they will drain much better and much faster, so you need to have them irrigated, but you have the Mississippi River recharging the water table there, and so you've got this great combination of soil and water components that allow for a lot of crop diversity in that area. So you see a lot of cotton, peanut, and then still corn and soybean production in these areas as well. Plenty of rice farms in this area. Arkansas, which is where Acre Trader is located, actually is the highest rice producer in the United States. And then lastly would be the West Coast, particularly California. Water is incredibly important in California, but provided the area, it's a large state, and some areas do not have as renewable or sustainable of water resources. But if that is, if there are two sources of water, groundwater, there's a canal running through the farm, there's plenty of areas that do have great water there. And it's like over 80% of the world's almonds are grown there. It's where the most of our organic vegetables are grown in the United States. It's a very diverse agricultural community. And so those are the areas that we see the most deal flow and where agriculture is really concentrated in the United States. Now, I mentioned different commodity crops, and this is to show that farmland is also not only concentrated in different geographies, but in different commodities. And but it's not necessarily a bad thing when you think about building a diversified portfolio. It would be like thinking of a residential real estate portfolio that is concentrated too much in multifamily housing. Like that is the majority of that residential real estate, or at least apartment buildings. And that's how, corn and soybeans are the primary commodities that are grown on row crop farms in the country. So just at a macro level, of those 300 million cropland acres, 230 million of them are represented on this chart here with these 6 commodities, and over 60% in just corn and soybean alone. And I guess it's not fair to think about this as just a corn or just a soybean farm, because a row crop farm is something that a farmer would make a decision every year on what they're going to produce there. Most corn and soybean farms are in a crop rotation between the two, and that crop rotation is there because different commodities will pull and deposit different macronutrients from the soil, and so it helps with soil health to switch the crops around. But if they're planting these because they're the most profitable crops to grow in that area. If over time it was more profitable to grow tomatoes or watermelon or other crops, then over time you would see this chart change appropriately, because farmers would optimize for different commodities. And when we think about that for sourcing farms on our platform, we don't think about it as just a corn farm, but it's almost an option. So if you have this plot of land, this 80 acres in the Midwest, that is an option to grow any of the commodities that soil type and that climate can produce. You're going to usually just lease that out to a farmer, and they will make that decision on what to produce there. But you're not locked into one commodity because it's planted and then harvested in the same year, and they would make that another decision the following year. And we hear a lot of questions about fruit and nut crops in the United States as well. We would also call these specialty crops, and how much of that overall cropland sector, that 300 million acres in the United States, how much of it do the permanent crops or specialty crops make up? And it's actually less than 1%. But fruit and nut crops do account for 15 to 20% of total revenue, just because it's a specialty crop or a high value. I mentioned earlier that California is the leading almond producer. It's actually the only state that produces almonds commercially, and they produce 80% of the world's almonds, also 80% of the US grape crop. Washington produces nearly 2/3 of the United States apple crop. Florida grows nearly 70% of the US orange crop. So these are concentrated in different areas. There's a little bit more specialty on the soil and climate type that is needed there. But overall, when you think about these permanent crops or specialty crops, it could deserve its own presentation, but it is something different than what we've seen on the historical farmland returns, just because it is such a small subset of the overall cropland acres in the United States. But we do have both permanent crops and row crops on the Acre Trader platform, and are certainly bullish on aspects of each. I've spent most of today talking about row crops, which have typically received most of their total return from the appreciation and the rest from cash rents. So they tend to be a little bit more stable or consistent over time because you've got the underlying asset of the land appreciating, and then almost like a coupon payment from a bond. It's maybe 2 to 4% on the cash flows each year from a farmer renting the land as the primary driver of that income. The rent that a farmer is going to pay is not going to swing around to where you would have an incredibly high year, but there's also very few down years because, one, it's a cash rent contract, and two, there are federal programs that are meant to help farmers. The main one being a subsidized crop insurance industry. And so if a farmer does have a bad year, they would receive a crop insurance payment and still be able to make rent. Whereas, if you were only dependent on a percentage of what was grown there, you would have different weather and productivity and commodity risks as well. As I mentioned earlier, there's a little bit more of a focus on the appreciation and lower variability or volatility there, and very, very infrequent leverage. We've actually not used leverage on any row crop farm on the Acre Trader platform. Permanent crops are a different animal. So the targeted cash flows do drive the majority of the returns here. I mentioned earlier it's a specialty crop. This would be like almonds, apples, cherries, pecans. You don't necessarily have that option or that variability on what is grown there. If it's a Honeycrisp apple tree, it will only produce Honeycrisp apples for the entire life of that investment. And so there's a little bit more commodity risk and a little bit less of a focus on the appreciation of the farm over time, because that tree is a depreciating asset. It's actually a depreciation that can be passed through on a K1 and be some sort of an income shield. But because that tree is depreciating over time, and for an almond tree, for example, it has a 25-year life. At the end of that 25-year life, or productive life, the tree would have to be taken out, replanted. There would be years with lower yields because the trees need to mature again before they're highly productive. And so that depreciating asset and upcoming capital expenses mixed with the appreciation of the land results in a little bit lower anticipation on the appreciation. But when those trees are productive, the opportunity for much higher annual yields is certainly there. The debt or leverage component does tend to be more common in permanent crop developments. And I'll give an example, and this is a very broad one, but if someone were to be developing an orchard, those first 3 or 4 years would likely have a lot of expenses and very low returns, because a 2 or 3 year old apple tree does not produce very many apples. And so if they were to finance some of that with equity, they could also finance some with debt and have 3 or 4 years of interest-only payments. Then once those trees are productive and they are producing a much higher annual yield, you can service the debt, still have a meaningful distribution to the investors or yield without hurting the returns too much. And so that is something that we see common. It's usually in the 20 to 50% loan to value whenever we do see debt utilized in these, whereas commercial real estate development may have 80% loan to value. So on that, the relative risk comparison, it may not be as high, but compared to row crop farms or in the world of agriculture, permanent crops are certainly the higher risk, just because there's more variables at play with those investments. Now, to have strong returns in any asset class, you can't just pick blindly. There's a lot of different considerations. On our due diligence team here, we're looking at over 100 different considerations before moving forward on a farm, and we have about a weekly cadence for new farms coming up, but are reviewing hundreds of farms every month. And I won't go into every single aspect that that our team is reviewing here, but I do want to give kind of a look under the hood of what happens before, we would put a farm up on the platform, or just some considerations of value factors in underwriting a farm. The first would be soil. So here we're looking at historical production. What if if there have been 45 bushels per acre versus 60 bushels per acre of soybeans, then the latter would indicate that this is a more productive farm. There's different soil types. I'd mentioned the sandier soils that have a little bit more drainage and allow for more crop diversity versus a loamier soil in the Midwest that may not have as much drainage or diversity, but typically would have more nutrients and higher crop yields. And so there's a lot of different aspects of the soil that we're looking at. And then kind of stepping back from the makeup of the soil is how does it lay? How does the field lay? Is there appropriate drainage? Is it sloped? Is this a field shaped in a way that a farmer could turn their tractor around easily, or is it a very bizarre shape? All of those can have, it wouldn't necessarily be a deal breaker, but they do add or subtract value for the price per acre that would be of interest in purchasing a farm. Second would be water, which is you do not need an agronomy degree to know how important water is for producing crops, but it is very different depending on the area that you're in. So the Midwest, I've talked about the soils that have more nutrients, they retain more water. There's also appropriate rainfall up there, and so having irrigation is not something that we really look for a farm in the middle of Iowa or Illinois. In many cases, you're actually looking for drainage because those soils retain more water. If it turns into a swamp or it holds too much water there, you're not going to be able to go through and plant or have a productive crop. And so in many cases, you're looking for drainage tile buried beneath the soil. If you've ever had a drainage issue in your backyard, you can think about like the French drain that you had to install there. The drainage tile is a sophisticated, or a little bit more sophisticated network of drainage tile of those French drains that would pull the water off and then put it into usually a county maintained drainage system in order to have a productive farm there. In other areas of the country, I'd mentioned the irrigation benefit in the Mississippi Delta because you've got such strong water tables there, recharged by the largest river in the country. But understanding how strong what type of irrigation is there. So there's furrow irrigation where you let water run in between different mounds, and there's pivot irrigation where you essentially have a giant sprinkler that is powered by a diesel or electronic motor that would turn and water the crops. So the kind of type of irrigation, there's not really one. There's more appropriate for different field types, but there's not one particular preference that we have. It would just be that the appropriate type of irrigation was there, and that the wells are strong and not dated. We wouldn't have to replace well pumps or in early years of the investment, something like that. The final water consideration or point that I would make here would be the West Coast. You're not as much looking for the drainage or water. I guess the irrigation, while those are important, you're more looking for water rights. So there's riparian rights where the water runs straight through the property or borders the property. And there's also groundwater rights where it could be pumped to you from many miles away. But if it has a good water position or water rights, or has multiple sources of water like groundwater and surface water, then you can get a little bit more confident with the long-term feasibility of crop production there, that it wouldn't turn into a desert if it didn't have the appropriate water over time. Next would be the financial situation or the financial profile. We're looking at historic rent rates, farm income, tax assessment, cash flow projections, basically the yield, the annual yield plus the appreciation. We want to make sure that the current contract and future contract would still be appropriate. And then zooming out, we're looking at some extrinsic considerations of that particular farming community. So I wouldn't want to rent out a farm to the only farmer in this county, because if they retire or for some reason are no longer able to farm there, you are kind of left with a bag. You don't have a tenant there to rent the farm. So rather than only underwriting that one farmer. I also want to understand that there's 20 or 30 different growing farmers in this area who would want to rent the farm, and there's multiple delivery points for them to bring the commodities that are grown there to, because then you've got a lot more confidence in the long-term rentability of your farm. And then we're looking at market trends in that area to make sure that there's enough buyers in there that and interest in that area that there would be likely appreciation. That was a lot, I know, and I'm sorry if I went too deep there. The 3 questions that you can always ask, this is a question we get from investors regularly, is, what should I look for in farms? And operator risk is certainly very, very important in permanent crops. Tenant risk or tenant market risk is something that could always be looked for in. And this could be if you're buying a farm yourself and not using the Acre Trader platform. And in all cases, what is the tenant market like, or who is the operator, is a very appropriate question to ask. What is the water situation, and what is the neighborhood like? It's important to understand that quality of the area that you're buying farms in as well. But it's difficult to invest in whole parcels of land. There's, from one consideration, it's just expensive. There are larger capital requirements to buy a whole farm. And so if you're going to, if you're thinking about farmland as a diversification tool for your portfolio, you could be very, very concentrated in farmland if you just bought one farm rather than spread that allocation across multiple. And then it's also difficult to find them. There's limited optionality. While many farms are trading hands each year, each day, a lot of them don't actually get listed publicly. There's not a Zillow or market listing service for farmland. And many of these transactions happen within local communities. And so our team is constantly talking with farmers, and in many cases we're brought an off-market deal from a farmer who says, I want to farm this parcel. I don't have the $3 million or necessarily want to tie up $3 million in buying this farm, but Acre Trader, if you buy it, I'll rent it out from you. And that's a deal that we would have never seen, because that the person who owned that farm may have just sold it to someone else in the local community, but because someone knew Acre Trader is their capital partner to help them expand the business, their farming operation, they can bring us those opportunities. But it's also just difficult to have all the ongoing management, especially if you're not in that local community. And that is why we created Acre Traders, to connect investors with farmland and provide farmers new financing options to grow their operation. They don't necessarily need to have more and more debt or tie up all of their assets in farms whenever they're really in the farming operation business. They're investing in equipment and trying to scale their operation efficiently. And here you see 900 million acres of U.S. farmland. I mentioned earlier, about a third of that is cropland, both permanent crops and row crops, which is where we're primarily focused. Now, how do we do that? We have a team here who's underwriting each of these farms. And once we get to a point where we have a farm under contract, it's under contract with a unique LLC. An example here is Acre Trader 117 LLC would be under contract to purchase a 100-acre farm in Illinois. We would then sell shares of that farm. So you may have 70 different investors who buy shares of that Acre Trader 117 LLC, would all be owners of that entity. And then there's end-to-end management. We structure it to be a completely passive investment, where after it's purchased, we are handling all of the rent negotiations with the farmer, any improvements that are happening on the farm, et cetera, and then making annual distributions to investors. At the end of the investment, we would have your initial investment plus the appreciation returned, as well as the kind of long-term capital gains. Why Acre Trader? There are different options to invest in farmland, buying your own farm. There are public REITs, and there are some investment funds as well. We have a very attractive management fee for the farms. All of the row crop farms are at 0.75% management fee. It's a completely passive investment. It's a direct investment in that farm, and so the volatility of a publicly traded REIT or just like any publicly traded stock is it can be a little bit more divorced from that underlying asset class. And then you have very limited direct commodity exposure and very limited leverage as well. Our investment process is pretty simple. You have multiple ownership options, and obviously one is a self-directed IRA. There are multiple funding options, and actually for IRAs, they would typically send that on your behalf, and so you would bypass the funding step of the investment process. And then the accreditation verification is something that is necessary based on the way that these are governed by the SEC. As Clay mentioned earlier, you can be accredited multiple ways, or there are many ways that you can be accredited. We would just need you to verify whatever the easiest would be. It could be a letter from a CPA, financial advisor, or attorney that says my client is accredited and has their information on it, or you could show account statements, W-2s, tax returns, anything that would verify you either meet the $1 million net worth status or have income over 200,000 or 300,000 jointly for the last 2 years. They actually recently augmented or expanded that definition to where if you have a Series 7, Series 65, any professional securities license, you can add that number in, and that would also make you an accredited investor. Just quickly, our system, this is a kind of look into what the user dashboard would look like on Acre Trader. If you're interested in investing, you can, with just a couple minutes, create an account, and it would default you as an individual investor using non-qualified funds to invest. But obviously, I think you're attending this webinar because you're interested in your retirement dollars, and so you would just select the drop down here on the individual investor profile, and you have the opportunity to add a new investor profile. You would go through a verification where we would just verify your identity, and you would follow the steps that you're prompted to add a self-directed IRA profile there. So it's also very straightforward. That's how you would add in the details for your IRA profile. And then I'll give a quick minute on what to expect during the investment process. So you would first purchase the shares. We would make the annual distributions. If you were investing individually, those would be deposited to your Acre Trader wallet. Otherwise, your K1s and your distributions would go straight to Advanta or your IRA custodians. We do give biannual updates, reports on what's happening on the farm and any other timely information. Like there was a 2 million gallon pond that was put in for irrigation in an apple orchard that was being developed in Washington. So anything fun like that, or just updates on, how was the harvest this year? What is the farmer planting? Just kind of keeping you informed on what is going on your farm. I'd mentioned the K1 that would be sent to the custodian. It would also be uploaded to user dashboard as well. And then the exit strategy for each farm, usually it'll be like a 5 to 10 year window that we would give for what the expectation is for when we would sell the farm. And we don't do that to be intentionally vague. We do that to be able to optimize for the best return for investors. And we don't know if that will be a neighboring farmer offering to, a great purchase price in year 6, or maybe in year 8, the market is very strong, and so we would publicly list a farm and market it through our brokerage here. But we'll be monitoring that local market constantly, identifying the best time to sell, and at that point you would have your distribution, your initial investment plus any appreciation returned as well. We do not have a performance fee or a carry in that deal where we would take 20% of the profit generated from that sale. Acre Trader has a wholly owned real estate brokerage, so that real estate commission that's usually paid to an external broker by a fund, we're able to capture that as the seller's agent. It's a total of a 5% real estate commission. 5 to 6% is pretty typical in any real estate deal. We would split that 5% with the buyer's agents, usually 2.5 to Acre Trader and 2.5 to them. That still incentivizes us to sell it for as much as possible, but it allows us to pass as much of the profit as possible back to you as an investor. So that is the end of my slides here. I will actually make Clay the presenter again, and I can turn on my video here, and we do have some time for questions.
Okay. Hey, thank you, Michael. That's great. I'm also going to turn on my video, and on the screen there, you'll see both of our contact information. Certainly, we're going to take a few moments here and answer some questions, but also if you have questions that pop up after the fact, please feel free to contact either of us to ask any specific questions that you have, or just kind of fill out the details of your investment strategy or the scenario that you're considering or things like that. So please go ahead and keep that information for your reference. All right, so most of the questions so far are for you, Michael, and I think I only have them here, so I'm going to read a couple of them out to you if you wouldn't mind fielding them.
Okay.
Let's see. First one I'm going to hand you is this suitable for 1031 exchange?
So 1031 exchange, you would typically have the same name as the buyer or seller of the first property and then the buyer of the new property. Because an LLC is formed and purchasing the farm and investors are buying shares of the entity, it is not subject to the 1031 rules that so we're not able to facilitate that through the platform. Someone would have to buy a whole farm if they were to use that.
Gotcha. And I'll also just add, because I get this question often, is there any kind of combination of self-directed IRAs and 1031s? And there's really not. Moving from one vehicle to the other. In very unusual circumstances, when you're talking about UBIT in a self-directed IRA, every once in a while somebody will do a 1031 exchange within their IRA.
Mm-hmm. Oh, really?
No paperwork involved in that.
Right.
But yeah, generally speaking, 1031s are also not something that works terribly well with self-directed IRAs. Okay. How liquid is the investment? So let's say that they chose one of the investments with Acre Trader. How liquid is that? What does that look like?
Yeah, that's a great question. So first, we do view this as a very long-term investment. I think that's why there's a good overlap with IRA funds, because people usually are not planning to access them immediately. And a large portion of the returns are in that appreciation that would be returned at the end of the investment. And so if the idea is I would question why someone would be going into it wanting to sell them, given that appreciation is so important and back-ended. However, there's a 1-year lockup that the SEC recommends or basically has in place, where you can't sell the shares of a private placement offering like this in the first 12 months. After that, you can sell your shares, your ownership of that entity. You can do that as just a private transaction where you're selling it to your cousin, or you could do it to another investor on the Acre Trader platform. We're actually in development on a secondary marketplace to make that an even lower touch transaction. You can imagine it like a bulletin board where you would post your shares. You would set the price, but you would be able to sell that to another investor.
Gotcha. Yeah, and I'll also say, this is to reiterate something I talked about at the beginning. Any investment that you're considering, there's always going to be a calculation of when that return is and does it fit. I think, in some cases, IRAs, because of the nature of the way that they're built with the early withdrawal penalty up to 59.5, in some cases is more patient money. So sometimes there's a nice match there for longer term investments. But again, this is one of those things where it's important to, talk to your financial team about the whole scenario and how it plays out and that kind of thing. Is there a minimum investment amount for Acre Trader?
Yes, and it would actually be for each farm rather than for Acre Trader in general, because you're investing in a different offering for each of them. It's usually somewhere in the 15 to 20,000 on the low end, 35 to 40,000 on the high end. There are some cap table limitations where you could only have a certain number of investors, and really just administratively, it's hard to keep fees low if there are 4,000 different investors on in one farm because of all of the administration. So usually it'll be a little bit on the higher end of that $15,000 to $40,000 range for larger investments, like a $5 or $6 million farm. If it was a $1 to $2 million farm, it would usually be closer to that 15 to 20,000.
Okay. Let's see. So there's some other questions here that are maybe a little bit more general, but they're kind of interesting. So are there types of crops that are best for the highest return? And I know you touched a little bit on this about the farmers obviously adapting to what's going to pay off their land and their operation the best, but are there ones that seem to be preferable to others?
So I guess for row crops, I wouldn't have one, because again, that would be the farmer's decision that they would be participating in. It's usually going to be on a crop rotation, and usually we'll have a 2 or 3 year lease with that farmer, where they're going to, eventually renew that lease, or we could find someone. But it would be they're paying $250 per acre to rent this farm. what it's growing is up to them. And so we don't have a strong preference there. We like optionality, but yeah, don't have a one single or strong preference. If commodities really go up in an area, or in general, so if it's a corn and soybean farm and corn and soybean is up 80% on it over 2 or 3 years, and it comes time to renew the rent, then usually average rent prices are going to go up in that area, and so there's some participation there, but it's more of a lagging indicator. On the permanent crops, absolutely, there are raisins, there's a glut in global production, whereas almonds, there's very few areas that would actually produce them, and so it just kind of depends on that commodity, and you are investing in that particular commodity if you're investing in an orchard that produces one particular type of fruit or nut on a tree. And so I won't go into the specifics of each of them. We do a lot of, if we are going to offer a platform or a investment like that, we do a lot of additional operator diligence, background checks, et cetera, and then macro research on that commodity. And so all of that would be available on the platform. We've done investments in almonds, a couple different varietals of apples, pecans. We have looked at, and not actually done this yet, but have looked at pistachios and olives as well. So, we do want to provide some diversity there, but want to make sure that it's in a commodity that we feel strong about for that 5 to 50 years for how long that tree would live.
Got it. So there are a couple of, there are a couple of questions here that are centered around track record. So, and it's an interesting one. So are each of the investments that Acre Trader kind of goes through, are they all discrete, and so their track record would be tied to whoever the operator is, or how? So as an investor, obviously we always ask, what's the track record? So, and I guess I see this in 2 parts. Are the investments all so discrete that it is individual track records for each thing? Does Acre Trader feel like they have a specific track record kind of as a benchmark, or how would an investor address that concern?
Yeah, that's a great question. I would say the 2 different buckets would still be that permanent crop versus row crop. For all of the row crop farms, Acre Trader is the sponsor. We're creating Acre Trader 117 LLC that would hold that farm, and we are handling the sourcing and management of it. For the orchards, because the operator risk is so important, those are actually sponsored deals where an operator who would be buying the land and growing those almonds would bring the offering to us, and you're investing in their operation as well. And so that would be more deal specific. The row crop farms are more, all Acre Trader managed, but they are reported on separately, would have different returns. If one had a windmill on it, or we got a hunting lease during the life of the investment, that one farm would outperform the yield expectations. It wouldn't necessarily be like a whole fund or whole portfolio that would benefit from that. And that's why a lot of people spread an allocation across multiple offerings. As far as our track record, we have about 50 farms under management now, and Acre Trader started in 2018, so we've been growing very quickly. The team has been involved in farmland and asset management long before that. Our CEO, his name's Carter Malloy, grew up around farmland and southern Arkansas. Actually, his father and grandfather owned a lot of farmland and would always buy and sell. And professionally, he took more of an equities route, where he was doing professional. He's at a hedge fund in California for the 5 or 6 years prior to Acre Trader, and had friends who were like, how do I get involved in farmland and farmland investing? That was what had him turn his professional investing lens to Acre Trader and really start this. Our COO came from managing about 40,000 acres with a group called Oxbow Ag outside of Memphis, Tennessee. So the team's been at this for a long time. Our 50 farms under management, some of them have been purchased this year, so haven't made distributions, but all of them that had scheduled distributions were able to make those for those row crop farms. Many of the permanent crops did not have scheduled distributions because they're being planted this year and won't have yields for the first few years.
Gotcha. So it sounds like the investment opportunities are quite varied, and some of them actually have facets to them that they're almost kind of ancillary to the crop or the actual return of the the growth. Is that accurate?
Yeah, I think so.
Okay. So I think that there's a couple of questions here about annual returns, and I guess I'm going to go back to your slide that kind of said some projections. Is that also deal specific, that in terms of, and do you project those on a deal by deal basis for investors?
We do, and there's an article called "The Internal Rate of Return for Farmland" that's on our website. If people want a little bit deeper dive, or I could share it with you if anyone's interested. But we always aim to be conservative here. It would be on a deal by deal basis. The way that we project those returns for the row crop farms would be the annual yield. That's the net yield that we would anticipate paying out, net of any fees to Acre Trader, any property taxes we paid, insurance policies, anything like that. And we just use the current rent contract. While we're usually optimistic that rent would go up over the next 5 to 10 years, we don't want to speculate on that. We'll use the current rent contract and the current net yield that we anticipate paying out. And then we add the 50-year average for farmland values from the USDA. The growth has been about 5.9% annually. So we take the net yield and the average annual growth rate. We don't get into mark-to-market speculation where we think we're buying this 12% below comps, or we think this area is going to appreciate at 10% a year. We just use a historical average and then do everything we can to buy well and then outperform it by managing it well as well.
Gotcha. So there's several other questions, and I appreciate everybody typing them in. A lot of them have some specificity to them that I think we'll address after the fact. And we are kind of coming up or went a little bit over our time. So I think I'm going to go ahead and wrap it up. But I did want to mention one thing that Michael and I were talking about before we started the presentation, which is just that, and I mentioned this on my my LinkedIn page about when I was telling people, hey, you should come and check out this webinar, is that the interest in investors in farmland and agricultural type investments has seemed to really increase over the last several months. So, and you were telling me that you guys have sometimes the investments you offer them, but they're not open for that long because they get fulfilled. Is that an accurate characterization?
Yeah, it is, and so we try to be as equally fair to everybody, and so all shares are reserved on a first come first served basis. And the thorn of that is that if all of the shares fill up in the first 2 hours and you weren't there, then unfortunately we wouldn't be able to facilitate an investment in that. But yeah, there's been a lot of demand recently. I think that comes from people looking at inflation or potential inflation, as there's a lot of stimulus funding that has become available, and just a relatively inflated stock market. People are looking for alternatives, especially with the volatility that we've seen. And so, and just, everyone's looking for diversification, and farmland provides some pretty unique attributes or that many asset classes don't have. And so we've been really, really thrilled by the demand, and we're not fluctuating at all on the diligence that we have at Acre Trader. That's why there's not even an offering up on the platform today. And we see hundreds of farms, but want to make sure that it's only the best farms that we're putting up. We are investing heavily in that sourcing and management aspect of our business. We're continuing to offer more and larger offerings, so there's just more capacity for each deal. But usually, so that we can get ahead of that, and no one has to make a decision within an hour of whether or not they would be participating. If you sign up for Acre Trader, we'll send out an offering announcement ahead of time, usually 2 or 3 days ahead of time, so you can review all of the details of the farm. It would be posted as like a preview farm on Acre Trader, where all the details would be available. You can review the investment agreement and the offering documents. And then the only thing that would change whenever the farm goes live would be there's an invest now option on that page. And so we certainly don't want to say that something's filled up in 2 hours and someone feels like we're putting any pressure on them, but we do want people to have all of the information necessary to be make an informed investment decision.
Gotcha. Well, again, I'll say thanks a lot for spending some time with us today and sharing your expertise in this asset class. And I hope everybody got some information about that. And again, if you have follow-up questions, those of you who are in the audience and you want to reach out to either Michael or myself or both of us, please do feel free to do that. And again, thanks for your time, and we will see you on the next webinar. And hope your investing experiences are great ones. Bye, everybody.
Thanks again for having me. This was a lot of fun, and hopefully it was of some value to the audience as well. Thanks, Clay.
Yep. Have a great day, everybody.